hell is paved with good intentions. We all understand that. I hate that saying, but it's really kind of true. Or maybe the road to hell is paved with fool's gold, and we're all just fools. Either way, how our politicians in housing keep missing the mark is really kind of impressive. That is, if you understand a losing streak of monumental proportions is as impressive as a winning streak of the same kin. Now, we in California are on one of those long housing losing streaks. Now, I'm kind of concerned because my governor is probably going to be the next president of the United States, and you don't know what that means unless you understand Joan Crawford and the infamous Mommy Dearest story. It's something like that. So here's how it goes in a nutshell, and it's coming to a theater, as I say, near you.
The road to hell paved with good intentions. 1. Insurance in California is too much. 2. California legislatures limit the amount insurers can charge or increase rates. 3. California burns down every year and has, quote, the most expensive replacement costs in the country. 4. As I said, California burns down. 5. Insurers pay big losses. 6. California burns down again. 7. Insurers once again. Insurers cannot raise premiums to cover monumental losses, so the only recourse for said insurers is to leave California or give them an ultimatum. Let us raise rates by over 50% tomorrow, or we're gone.
And they are gone. They're all gone. In the process of trying to make insurance cheaper for you, legislatures actually made it more expensive and prohibitive for insurers to even offer it in the first place. Now, this started with a piece of legislation by California legislatures who don't understand the insurance industry, trying to save me money and save you money without doing the due diligence in the whole process of writing that bill. That now puts Californians in a position without insurance, which is what NASA would refer to as a singular point of failure, meaning if this one thing goes wrong, the entire system fails. Insurance is doing this in California right now with housing, and this is our reality. Yes, the average home price in the state of California is about $1 million right now, just north of $900,000. But if you get replacement insurance, then the value is nothing but fool's gold if you can't actually act on it when it's required. And again, this is the road that we're paving that is coming to other states across the country.
For example, State Farm, California's largest insurer, is requesting a 30% rate increase for its homeowners line, a 52% rate increase for renters, and a 36% rate increase for condominium owners. State Farm was previously approved for a 20% hike for homeowners and condominium owners back last December.
And as we said, if they don't have these massive increases, they're going to leave the state. Fifth largest economy in the entire world.
California has seen an average of more than 7,000 wildfires each year, consuming an average of over 2 million acres over the past several years, according to data from the governor's office. Scientists and California authorities blame the climate crisis for the intensity of the fire seasons.
So as Joanna said, California has an average of over 7,000 fires each and every year, consuming on average of over 2 million acres over the past several years. This isn't changing.
You see, here's the point. The average cost of replacement for a home in California is 30% higher since 2020 and COVID. So everybody in California who hasn't had their catastrophic replacement insurance looked at since 2020 is probably woefully underinsured. They have to raise premiums. This is the reality of our policies.
So here's where you guys come in. Guys, we are giving you the nursery rhyme cliff notes of Tolstoy's War and Peace here. Insurance as it relates to real estate and mortgage lending is not exclusively a California problem. We're just exceptionally good at screwing things up. This is you too. It goes like this. In today's mortgage lending, you have to be an expert at insurance. Totally serious about this, guys. There are so many angles to this story and how you can insert yourself into that solution for all of your past clients, which puts you in the middle of a conversation about real estate. It's a Melvillian undertaking for you to do this just to define said opportunities. I mean, you'll help insurers, you'll help agents, you'll help realtors and homeowners, and most of all, you're going to help yourself. All the representative databases of all those people can be yours for the taking if you undertake insurance as a cause that you need to speak with your past client database about. Your community, the people around you, you be the expert. You and your willingness to expand your knowledge set, not because it pays directly, but because it's the right thing for you to do, and it pays holistically in a way that makes you a better loan officer and or real estate agent. You become that impenetrable person of confidence with your past clients. You see, when your clients look at you, it's going to benefit you. So if you have time to lean, you have time to clean. Become an insurance expert, because the little problem has has now grown up and blossomed into King Kong. And again, it's headed your way. I hope this helps. Thank you. Perfect.